Has the Federal Reserve just given a green light for market to go much higher? Hello, ladies and gentlemen, and welcome back to the Daily Show where we discuss stocks, commodities, and cryptos together. We've been discussing the idea of a short squeeze in this descending channel that's been happening since August. But with the most traded Wall Street zone of the last 18 months getting some respect, should we be paying attention? Well, the answer is absolutely. Home builders finding some serious buying, and possibly the most important sector of the markets right now was on fire. We also saw yield starting to drop, which is helping treasuries and calling for maybe now a Fed pivot moving forward. And central banks put a little bit of sneaky injection in. This and more coming up in today's show. Well, welcome back, everybody, to the Daily Show where we discuss macro lead indicators and, of course, the hottest charts going around the internet right now. The big story was gamma. Basically, anything to do with high gamma was up. But I think the biggest story lies a little bit deeper. Let's discuss the FOMC statement and, of course, Jerome Powell's words. First up, was the statement any different? Not really. Committee decided to maintain the target range for the federal funds rate at 5.25% to 5.5%. All the usual kind of stuff in there. However, Jerome Powell came out and he said a few things that made the market think, oh, maybe we're done with rate hikes. And that brings us into a discussion of whether we've just hit the upper limit of policy rates. You might notice something here. The Fed tends to pause and sit for quite some time, 8 months, 14 months, 7 months. So quite a long period of higher for longer, which is what they've been saying for a while. But it actually looks like the Fed's dot plot that was released in September might have been a lie. They were pricing in another rate hike by the end of the year. I'd say the chances of that are becoming slim to none, and the market's starting to agree. Also, the market's now got a Q2 for rate cuts next year, but I'm starting to suspect it might actually be as soon as Q1. What do you think in the comments down below? Most importantly, though, we're seeming to see this plateau. Just before we get into the rest of the show and we talk about the seasonality and the data supporting a possible bull rise right now in markets, I want to say a big thank you to everyone that got us to 150,000. We're doing a November competition. It's completely free to enter. Just put your name and email address in and press enter there. Links in the description down below. And I'm going to meet a few lucky winners soon and hopefully have some great discussions about the market. So obviously, all you've got to do, put it down below. And I've always got to say, you've got to be in it to win it, basically. And why not give it a shot? It takes 2 seconds. Let's talk fear and greed index. And straight away, we've come out of the fear zone. Basically, we're starting to get more into the neutral by the day. And as we saw, Bank of America's read as well, based on their index, was showing us that we're already at fairly extreme pessimism leading into this week. I think the story, though, lies here. On our X account, Twitter down below, if you want to follow along, I posted this chart. It's home builders and construction. Basically, what we've seen recently was a series of lower lows and lower highs. We were basically in a downward trend. And you can see downward channels almost anywhere in the markets at this stage, S&P, Qs, etc., etc. Then we broke out in a big way after the Fed's comments and statements. Now, often we base with a market like this, and it is one of the leaders in the economy right now. Another reason why we might be seeing some strength come back in is because we know institutional clients have most likely stopped their tax loss harvesting. And it brings us up to an interesting point. You might say, oh, I missed out on this stock or that stock or whatever, or maybe you don't have Microsoft at the price you want. Well, there are other stocks potentially available. Now, this is just what Bank of America have put out on buy ratings, but they believe these are the tax loss harvesting style stocks that are out there right now. Terrible year-to-date returns, possible opportunities on the horizon. And of course, these are just some that you can check out on our Twitter X if you want to have a look at them and see what they have to say. The more interesting thing is when we take the stats from 1986 to present, you might notice here that there are actually some pretty interesting stats. Not only do they sometimes perform better than the market, but they actually have a slightly better win rate as well. Good work, Bank of America. We'll see whether they can be true again. And of course, you've got to practice your own risk management whenever considering any of these things. You need the good technical base, you need some fundamentals, you need everything that you want to be looking for. So of course, make sure that you do that. Let's talk about bullish percent index. What's going on with bullish percent index? Well, it's improving. This is another positive sign for markets. Of course, there are some negatives, but things certainly improved over the last 24 hours. There's little doubt on that. Did we expect a turn here? Well, Wayne put out some good stats here. I really enjoyed this. Actually, the third day, which we just had, was the one that usually sends a massive bull run into the markets. And it happened. So we knew that we were coming in with good stats, 17 wins to 1 loss. And it played the game in a big way. So far, so good for that. We also had some other stats that said when we enter into a correction, we tend to see bullishness. It focused on bullishness this week, 66.7% of the time in the last 15 and 62.7% of the time since 1928. Some long-term history stats there. Speaking of history stats, by breadth, did it improve? Yeah, it did. And in some ways, we're getting here a little bit of an interesting read. We've gone into excessive pessimism. Yes, things are getting worse in some ways, and they've read into a period in time where sometimes it's good to think differently. 1 week later after these reads, all the way to 1 year later, you can see some of the win rates here. Not too bad. Of course, markets are usually built into to be bullish, but some pretty strong stats over the next 6 months if we are to believe that SPY breadth will be increasing after having a really bad breadth time. What about the idea of August, September, October being negative, therefore the other months being positive? Not too many data points here, but it does usually support a pretty strong November. 100% of the time we saw bullishness, and of course December was 80% of the time with a combined total overall of 80% in similar reads. There's not too many data points there though, so you've got to take it with a grain of salt. Here's how pre-election and normal years work in November. You can see the strength coming in near usually the end of the month more so than the start. We get a lot of up, down, and all around. And more of that to come when we look at the charts later on today in the video. Forward PEs, we've talked about this a bit before, and I posted this over on our X account. And you can see here that we hit 17 forward PE. Remember, as an investor, 16.8 is average. And actually, if you took out like the Magnificent Seven, it was pretty attractive to be buying the market the other day from, an average standpoint anyway. Some other things that we'll be looking at in the future will be things like uninversion of rate yields. Have we seen that yet? The answer is quite simply no, but we will be focused on whether the market does that. Some interesting timings come into play, including the jobs numbers, which we're seeing later on this week. You've got to stay around. We've got to talk about that as well. And we'll see a new sentiment read very, very soon. So I'm excited to see this sentiment read because I'm wondering whether everyone's gone bullish all of a sudden and neutrality's come back in, or whether the general sentiment out there remained bearish. I'm noticing quite a lot of people really getting on the bull bandwagon. And what a time for us to talk about crypto. Speaking of bull bandwagons, new high on crypto. Well, we tend to usually do relatively okay over this period. October does tend to be the month for seasonality on the old Bitcoin, and it usually runs through November as well. There were some times, didn't do so good, but do remember that we have that big split coming up. So, of course, basically what's going with crypto is we're going to see the halving event. Now, when we see the halving event, we know that that tends to start a new cycle, and there are certain things that come across with that. We've got some stats over on our X account as well if you're interested. Let's talk earnings. We still have some big ones. We just saw PayPal come out and a few others, but now we've got Palantir, huge expected moves, Shop as well. Be careful of these. AAPL and Block. So some of these are going to be massive. I still prefer Square as a name than Block. I still think Block's a bit of a poor name. We do know that with earnings, it is all about how many earnings are coming through. So this week is the biggest one. Then we kind of start to drop off and basically earnings is over. And of course, we want to know our options expected moves. These are all the percentages. Be careful out there, guys. PLTR is expected to move a plus minus 13+% on the session. So it could get a bit feisty out there. Bitcoin halving, just another way to see it. We've brought this chart up a few times before, but let's talk about large, big, dark pool transactions. This isn't usually the one that we see, obviously TLT. US Treasury 10-year note ETF. 2 monsters came in. Monsters, look at them. Out of nowhere, big traders. So yeah, some big stuff going on with treasuries. Did they just get a buy signal and they said, you know what, we're ready to go straight back into treasuries? It's possible. We also saw another fund. Now, this wasn't, of course, this isn't one that you might recognize, but basically large cap growth ETFs, high gamma in general, getting some strong buying on it as well. Fairly new fund, or at least we don't have too much history on it. But one thing that did occur was large trade, and it came in out of nowhere. Again, it could be buyers getting into the market. And we're going to now have to think about this because it's going to become quite important. Gold, we're talking about the short squeeze. Obviously, this plays out over months, not days. So we're discussing whether this is going to work again like it has in the past, where we've gone super negative on managed funds, and then those managed funds get trapped in negativity and shorts and get unwound over time. Since this chart was posted, it's already gone over 2,000 an ounce. We'll talk about gold very, very soon. And then we have Microsoft getting a large trade on it. My favorite stock in the market, getting quite a few largish trades coming in to the end of the sessions and over the previous couple of days. Let's discuss options. What was the options market doing? Well, we did see some interesting stuff here. We continue to see too many people piling in on puts on the Russell. Poor Russell, it can't do anything well, can it? It's only up 0.6% when the rest of the market's doing well, and it's still looking at almost double in size of the old puts versus the calls. When we go through a few other stocks here, you can see there was quite a few things going on in terms of large trades, and it was mostly a lot of high gamma that was really getting focused on. iShares, Treasury bonds. Now, let's have a look at this one. 2 times. Look at this even itself out. Calls to puts. First time in a while, we've actually seen puts getting a little bit more love. So I think people are starting to bet against it. Meanwhile, calls starting to come up. I'd like to see that switch where we have heaps of puts as it rolls up. 39 versus the average of 39, 54% puts versus 46% calls. Not bad for the bulls overall here to see puts starting to get stacked back into the market overall. That's what you want. You want to kind of think a bit contrarian from that aspect. ITB was the winner over the last 5 days now, shooting to number 1. We also had REITs coming out of nowhere and financials. It's like there was loose lips when you think about it because, yeah, financials and REITs and everything were kind of going early when you think about it before this whole announcement. Makes you wonder. Then we look at the last 24 hours and it's clear that it was gamma, and yeah, home builders in general. And there was just like a mixture through the rest. I did like what I saw in iron ore stocks as well. They really came through, and I've been focusing a bit of those on our private community and also just discussing them in general here. We did one on commodities super cycles the other day, so that was really exciting to cover off. A few of you were commenting, what about the Skew crush, you said? We haven't brought up Skew for a little while. Generally, I like to look at Skew when we're at kind of extreme highs in markets or extreme lows and see what happens. You'll notice often that what we want to see is a stabilization or Skew to actually now cross towards the bull side if this is going to be a real rally. This recent crush, okay, we came down, but it's more notable when we're at high-end areas in the market. So when we're at a high for the market and we're seeing a Skew crush come out of nowhere, that's when we want to be paying most attention to it. It's one of those kind of market indicators. Breadth, well, we saw a percentage of stocks above the 20-day moving average move to 35%. We saw above the 200 improve to 28. And of course, we also saw above the 50 really improve 23.71. So some big movements there. What about US 2-year versus 10-year yields? Well, they were switching as well. And most importantly here, we actually saw a non-reinversion. So basically, we're not uninverting just yet. We're not under 1%. We actually saw it come back up. So it means that we've still got a bit of time before some of those timers start to arrive. Remember, we know that when maybe unemployment starts rising and we see an inversion of the yields, we tend to be closer to a recession being called. And we will be talking about that, of course, when it does happen. TLT, nice session for it, up 1.82%. Big volumes as traditional at the moment. These volumes are just massive through treasuries at this stage. And it could be getting ready for a breakout. As you can see here, we've kind of put a couple of high resistance lines on. Not one of my favorite trades. I've still got alerts set at around 80, 89-ish dollars to see whether we're actually going to go long here on treasuries. But yeah, things are starting to look a little bit better for them, and it's all got to do with yields. Do remember, if you're going to set some alerts, you want to be putting US 2-year, 10-year, all of these on the charts. And with the 2-year, you'll notice it came back down to the trend line. So big support, big demand area as well. Trend line, a lot to like about this zone. So we'll be watching whether we can make or break this level. This will be a zone that we will watch. Upward volume was improving, 68%, so that's not too bad. And we saw copper starting to think about breaking out. Now, as you would know, we talk about copper from the doctor standpoint. That is, copper usually drives economies. Basically, if we see copper improving, so is good signs of economic health. In this case, it looks like copper is about to break out to the upside And if it does, that's a fairly good sign again that we may have seen the low on markets. What about equal weight markets? Yeah, it was improving. So, of course, we're seeing breadth coming up across the board. We still have an alert at 137.78. Maybe too early to tell from this particular sector. But yeah, equal weight definitely improving. Dow Jones Transportation Average, good signs. Nice little V coming off there. And obviously that's improving. And of course, anything to do with home builders, as we mentioned before, a series of lower lows and lower highs. We're not above 78 or anything, but we have seen what looks like a potential bottom. And pullbacks at this stage could be met by bull demand at least back to 76. So again, home builders, ITB, construction, all that stuff looking like it might be turning around. We did mention that dollar may be bulling into the highs, and it actually did so. Didn't quite make a new high, which is a little disappointing. I would have liked it to have actually taken this and then come back down. But yeah, it was a good little TP if you'd gotten into longs here, maybe break even TP around this area. And we still haven't broken out of the range. So I would say we're back to being probably neutral. If we have seen the high, of course, in yields, and that's what some people are suspecting, then it could be a time to see that the dollar actually starts to weaken off. We will be watching very closely the way this breaks, the way it looks, and of course it sets up. Gold, hovering, doing nothing really. Gold is just stuck in this range. Have we broken down to show us that swings are getting back into the shorts? No. Are we still in a bull trend? Yes. Are we still above those important levels? Absolutely. And do I think we're going to get a new high on gold in the future? I would say yes. However, we don't know that that's going to come just yet. It's very hard to trade the small time frames. If you got into it or were lucky enough to get into it the other day, that would be a bit better. Let's take a look at gold stocks. They came down to our zone. Nice. That's pretty cool. And then we saw some buying come back in. So again, not too bad for gold. Gold stocks in general having an okay session. Let's move over to US oil. Now that got smashed right back down and it tested the supply. You can see really here a drop base, drop kind of scenario, and the supply was tested. It was shorted down, and we continue to kind of look at oil as possibly a negative. Now you've got some good levels though. You can actually mark this resistance out just below 84 a barrel if you're watching this in the car. I know a few of you do so. And if you see a break above that, while it's going to be a bit hard because of the supplies here, you might be able to get like a little scalp in or day trade. So we'll be watching it, but oil for now still remains negative on our list. Tesla, bit of an improvement, obviously back to 205. I think it's still too early to tell on this stock whether we've really done a turn. But I tell you what, that's a nice weekly rejection week should it hold it. So we'll find out that in only a few trading sessions. But nice big rejection week. If the markets hold up, maybe we've seen the low for Tesla for now, and we'll keep updating you. AAPL, good breakout. This is not too bad, and it's coming in the face of the big earnings session. So really, it's going to come down to earnings. It's not so much about a 2-hour chart or anything like that. It's going to be the earnings that matter on this stock. But we're at that resistance. You can see the alert I had set just above here. And what I'd like to see is something like this occur and showing us that maybe Apple has bottomed. Now, this is all going to come down to the earnings, though. So be careful, guys. It does move a little bit during such events. US 2000, did we see recovery signs in the smaller stocks? Yes, but nowhere near as good as the Nasdaq or the S&P. It might be bottoming. It's very, very tough. I still favor a 1710 plus, and I do think the Russell's going to give the best opportunity, pure percentages, but first up, usually gamma goes if we are in a strong kind of uptrend or we're starting to do it. The Australian market people will be pretty happy. The Aussies out there will be really enjoying, I guess, seeing a new high here. 6,900 alert went off pretty much at the market open, and we saw the market come up. I'd like to see maybe a pullback into strength, but this is a good first strength sign for the Aussie market. So quite a lot of signals, as we can see here, showing us some decent strength. German market was the same. Came back to the 20 moving average, which is that red line, but at the same time, it just kept recovering off the base of the other day. And yeah, it's kind of in line with some of the things we've been talking about from that market. Let's talk Qs, big strength, coming into a little bit of a supply. So let's look at the futures. You can see here this critical level, but you can also see that we broke that trend line on the way down. So positive signs, we've got now areas that could be seeing bulls if we do pull back. And yeah, it's a good little area for the Nasdaq to maybe have that kind of potential little bit of TP. I like to use the S&P though, which we've talked about. Most traded level, nice. Downward trend line, nice, very good. 20 moving average, interesting area. And of course, we do have as well supply. But there's a little bit more than that. I've got a couple of lines set for us so we can see it. 20 moving average, supply, and of course here, some green squiggles as well, which has got to do with VWAP. So overall, we have a pretty key level. If we keep breaching this zone, we're going, I would say, towards this next area up here, which is going to be important, around 43.60. And there are some nice signals here coming in from the market towards the strength. First up, the other day, we kind of talked about this being strong once it broke through 41.80. We would have preferred during the Jerome Powell speech for the market to do this. That would have been really good. You know, false move often first. In this case, though, it was all just Jerome Powell telling the market how good everything is and how we're going to pivot and all of this other stuff. No, he didn't say that, but you know what I mean? He basically gave the juice to the market, and it was a great excuse to get it straight back into that supply. So if you're a seller, if you're someone that's about, this is your area. 42, kind of 50 to 42.80 is going to be where you're looking for structural potential resistance. And if you do get something like this, then you're going to be saying, well, okay, I think there might be a decent risk reward trade towards the short here. This is the area most people will look at. Based on things like home builders and stuff, even if we do see a sell, it does seem like markets want to go higher. And that's a mixture of seasonality, a mixture of data, a mixture of TA, a mixture of the lead indicators. Everything just improved so much. But I do notice that there's a lot of bulls smelling around now in the markets. So maybe that is a contrarian after itself. Let's find out what that sentiment indicator happens to do, and we'll do that in the next video. Bitcoin traders loving themselves, new high. I think there's all sorts of speculation here. So we saw a nice 5% increase. We haven't really turned bearish on Bitcoin or Ethereum. Obviously, Ethereum smashing this zone, which is where we talked about the resistance being. And yeah, it was more of just this is most likely, it looks like, some form of accumulation with breakouts. And Ethereum should be behind Bitcoin. Usually Bitcoin goes first, Ethereum comes second, the rest of the alts come third. So there'll be plenty of opportunity, I'm sure, in these markets should you like them. And at this stage, where do we think these markets could go? People have been asking, what's my call on Bitcoin? What do I think could happen? Oh, I guess the problem is there's really nothing much stopping it until at least 40,000 or right around just underneath 40,000. So it seems like it's going to try to get it and everyone will get hyped about it. And then it'll probably do some kind of hype beast sell-off. And then hopefully there is opportunity coming into the halving event. Do remember there are still big news for the week ahead. It is all about now the unemployment figures, and that's going to come in Friday. Non-farm payrolls. And this is a big deal. 8:30 a.m. New York. Make sure to watch or make sure to be aware of it. For day traders and scalpers, it is going to be a risk, so we will be on top of it. And of course, enter the competition. If you haven't already done so, you enjoyed today's video, remember, name, email, enter here. That's simple. We will draw it in a little over 4 days' time. And I hope to meet one of you, or actually two of you, very soon, with the first and second prizes being something I think a little bit special. All right, thanks so much, guys. Subscribe, smash that like button, hit the alerts. We'll see you in the next video. Bye for now.